Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high-quality, free trading education. Now, without further ado, let's jump straight onto the charts. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which is testing quite significant historical support and demand. In fact, from here, all these rejections to the upside were created. We can see how multiple times the market tested its zone and rejected it to the upside. And we can see how at the moment the market is testing the exact same level of support, from which there is definitely the possibility to see a potential rejection to the upside, as already happened in the past, every time the market tested this area. Now, if we zoom in closer to the most recent price action, and we notice what kind of pattern the market has created in creating this move to the downside, we can see how we had the creation of this M pattern. Now, as I explained many times, after the creation of an M pattern, what you could expect is a move higher for the completion of the M pattern at the neckline, which is essentially the previous support turned resistance. So here on the monthly, we could expect a potential rejection to the upside away from this level for a completion of this M pattern at this previous support turned resistance here. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can see how we had a massive impulse to the downside without any kind of correction. However, we can see how here we had all red candles with quite strong volume to the downside. However, now we're starting to see multiple corrections. We can already see two green candles. So it seems like the market is starting a deceleration, which could be in accumulation phase at the support that we have previously identified on the monthly time frame. And if we're actually getting an accumulation here, that definitely increases the probabilities of a move higher away from the level. And we will be speaking about this accumulation later on when we check what institutions are doing. Dropping down on the daily time frame, what do we have? Well, from a daily perspective, what we can see is that we did have the creation of this W formation, and in fact, I did make a full breakdown of EURUSD a few days ago when the market was here, and I explained all the reasons for which from here we could expect this rejection to the downside. And in fact, that is exactly what the market gave us. And by the way, I will link in description that previous analysis, so you can go and check it out for more free education. However, at the moment, what we can notice is that until the market will remain below this previous high, this will be a bearish market, because always remember that until the market is creating no new clear higher highs, there is no bullish market. So if we go and see what we have when it comes to the commitment of traders, so what institutions are doing, and we check the data precisely for the euro, we can see how with the last reports we went from 75k net positions up to 85.2k net positions, with 1.2k longs added with the last report and 1.5k shorts getting closed. So clearly institutions are moving to the bullish side of the euro. Now keep in mind that all currencies on the spot are traded against the USD. So if we're checking the data for the euro, we're actually already checking EURUSD. And since institutions are increasing their net positions on EURUSD, this means that there is a high probability that if and only if the market will break above this previous high on the retest of this previous resistance turn support, here we would have more institutional longing, and that could further increase the probabilities of a potential move higher, because if we get institutional longing here, that increases the probabilities of a move higher because of all these buy orders coming from the institutional side of the market. And at that point, we should see those reflected also here with more longs added and more shorts closed on the institutional side of the market. So we don't know if the market will remain below this resistance level. But if the market manages to break above, that is where things get interesting, because after a break on the retest, that is where we have good probabilities of a move higher. So if we get this break on the retest, how we could be approaching this potential move higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential move higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I'd really suggest that you go and check out the transparentfxtrading.com website, which you find linked also in the description. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to get access to one-on-one private mentoring, the web market breakdowns with the Telegram signals, the CO2 data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97, one-time payment. And if you scroll lower, you will see that at the moment the time to join with the current special promotion is starting to run out. So I really suggest to go and check it out as soon as possible. And directly from here, you will find the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest that you go and check it out as soon as possible. The link is also in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.